Oil just hit $110 a barrel. The NASDAQ is officially in correction territory, and Wall Street's ultimate fear gauge just exploded. Here is exactly why the market is panicking today. Major US benchmarks like the Dow Jones and NASDAQ have officially dropped more than 10% from their recent highs, landing them in correction territory. And the VIX, Wall Street's ultimate fear gauge, just surged past 31, showing us a market that is deeply unsettled. Let us start with the bearish trends weighing down the global economy. The market is currently dealing with a massive structural shift. The Federal Reserve is effectively trapped between an inflation floor and a growth ceiling. Earlier this year, investors expected interest rates to drop, but new projections show we might only see one or two small cuts later in the year. Some major banks are even pushing their first cut forecast back to September. Why? Because while the economy slows down, inflation in the energy and services sectors refuses to drop to the Fed's 2% target. Fed Chair Jerome Powell is speaking this Monday at Harvard University. If Powell signals that surging oil prices are making inflation worse, the market expects him to keep rates higher for longer. This is bad news for the AI bull market. Tech giants like Nvidia and Microsoft rely on debt to fuel their massive growth, and high borrowing costs could quickly dry up that funding. If you want to stay ahead of these massive market shifts and protect your portfolio, hit that subscribe button right now. We bring you the real, data-backed trends every single week so you never trade blind. Adding to the bearish outlook is the US labor market. We are looking at a job market that is stalling out. Back in February, the economy shockingly lost 92,000 jobs. For March, economists only expect a small bounce back of about 48,000 to 60,000 jobs. Even worse, a new rule starting this month means non-US citizens can no longer get Small Business Administration loans. Because immigrants create a huge portion of new jobs in states like California, this policy change could slow down hiring even more in the coming months. But here is the real danger for traders this week. The critical March jobs report drops on Friday, April 3rd. That happens to be Good Friday, meaning the US equity markets are totally closed. Traders will be stuck in a data vacuum. You will not be able to adjust your stock positions until the opening bell the following Monday, which could create massive, unpredictable price swings. Now, let us pivot to the bullish side of the market, because money is still flowing into very specific sectors.